I love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. And when I feel like this, I'm immortal. 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 Don't be scared. Just give me up. Don't be scared. Back. I won't stop, I'ma fight until there's nothing left. It's so what? You're gonna be hurting bad, cause I've been to hell and back. You don't wanna make me mad, I stay strong. You will never see me crack. And if you get in my way, you're gonna feel the wrath. Gotta say it to my face while he's looking back. Mirror breaks after math, when I hate, I attack. I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. Don't be scared. Just give me up. Don't be scared.
Hello everybody, this is an unexpected and wasn't really planning on doing anything, and it's not because it's crashing really. It's there was originally a plan to do all sorts of things, and then things got sort of derailed, and then I wasn't sure what I'm gonna do, one thing or another. At the end of the day, what happens here is that we are having a bit of a live. I'm gonna try and follow up on the price action as is, as the sort of the night developing, and we're gonna see really what it is that the market allows us to see towards the end of the session. We're not necessarily, we kind of can combine the earnings call itself. We'll see where we might do that as well. For the time being, we're just going to observe the technical analysis of things. We're going to sort of discuss what it is, how we're seeing it develop, and how does it fall in line with what we were expecting. Right? Give me a sec. Let's see if we can get it on screen without anybody too annoying. Do we have without any commentary? No, not seeing what I'm looking for right now. Give me a second. I'm gonna try and get it on Bloomberg. See if I can get it there. If any of you guys have a link, DM it to me on Discord. I'm gonna see if we can now get a stream running. No, that's not what we get there. Anyone? Can anyone offer a stream of the earnings call without all sorts of back talking characters. If you guys can find that, I would tremendously appreciate it. Send me a link on Discord. Alrighty, let's go back. Let's look at the chart, see what we can see at the time being. The 1 minute, well, pretty flat, actually picking back up, which is interesting. But then again, since we're at the bottom of the channel, it sort of reacts in a very natural, normal way. I'm actually not saying the market overreacting, as this may appear very volatile in comparison to that very flat day, but it's not all that surprising. Again, don't forget that's kind of abnormal day relative to Palantir itself, and so the whole volatility was kept for the for the earnings call. On the grand scheme of things, things are still not looking very bright for Palantir. As you can see now, even worse. We were just covering that stock on the technical analysis that we've been seeing in the community. We've covered it for this last several years, and as much as I do like the stock, as much as I do believe that it's going to be an integral and an inevitable part of how society develops, and it's again going to become a staple. Obviously already is in the military sector and the private sector. It's slowly becoming as well, and it's going to be a lot more saturated. But in the time being, and something that I've been warning about, that this is very irrational, very abnormal, especially when you have the entire tech sector literally crashing and barely able to scratch back, sort of at previous support resistance levels multiple times, sort of crashing lower and lower while not able to correct. Palantir is skyrocketing, which was very, very abnormal. In my community, I warned that it is a very similar behavior to Affirm, something that we've seen in the past, and results in very volatile market and basically the retail being screwed. To put it nicely, or for what it is really. At the end of the day, right now, as the channel sort of stands as is, on a 4-hour, I'm not going to be all that surprised if we're going to trace back to that 108.23, 109 kind of area, where you have this convergence of the forces, given how we're having this flip over. And this looks, again, very, very steep. And this, of course, comes from here, and of course from here, and of course from the price action itself. Right now, I would argue that we're retesting whatever was the level right here, which is around 115. Conveniently very similar and sort of suitable to where the bottom of the channel, if I'm not wrong, was. Yeah, pretty much in line. 115, 116, give or take. And so yes, now we're breaking even further lower, right? Let's see what we're seeing on the 5 minutes. A bit of a corrective impulse right there. 1 minute is about to continue breaking, and so take it even deeper. On the 1 minute, it's going to be very, very evident on how the price action is going to play out. So that in the nearest seconds, in fact, we can go even deeper and observe it from this point of view. Those who want to know how we knew and how we were able to predict all these wonderful things, I highly recommend you join the community. Joining the community will let you join our members meetings, which we had just one today. It was very short, not as long as I wanted it to be. We have various all sorts of types of meetings. We chat about everything and anything. In the academy, of course, we go in depth. Again, to the main chat, we discuss everything and anything, all the tickers. The meetings, like I said, charting 101, my positions, so all my members are aware of what I hold and what the recent changes are, all sorts of other cool topics. And yeah, that's where we discuss, and we have our meetings where we just recently discussed about how Palantir may be behaving, right? There we go, a bit of a corrective movement to the edge of the channel. That sort of makes sense on the 30 seconds. Don't worry, that was 30 seconds, to chill out. It's the very same sort of direction we had before, a little bit of a crossover here. So still retains overall in the grand scheme of things bearish, not bullish. Let's see how things will adjust as we play out. The earnings, of course, as you can see, came in green, but barely so. And I guess most of everything that we'll be looking out for will be the expectations onwards, right? And so the expectation may change the narrative significantly. Let's see, 45 still remains being very bearish. Let's see what you guys are saying in the chat, if anything whatsoever at all. Miss Lily, nothing. Yes, that is pretty much a nothing burger for the moment. At the moment, it's not a big deal. It's the market is still, I would say, all it does right now, it sort of moves into the area where it might open up and close the gap that we've had just literally a night before. So not all that surprising. And this moment, it's still very, very tame. For us to see that it's actually making a significant movement to the downside, I want to see it cross the 108.23 area. That will signal to me that we are actually looking at a downwards trend. The nearest one right after that is 103.41. We have 79.49. We have another level, of course, with flat 100. We have the flat 90, 95. There is a multitude of levels that I currently don't have on screen, and the more of them we're gonna plow through, the worse it's gonna look like for Palantir. And in fact, if we're just gonna end up opening with a tiny little gap tomorrow, it will probably gonna get corrected very quickly, and then Palantir will simply continue dropping with the SPX and not on its own. It came in hot before the earnings call. No, that's normal. Just again, normal volatility. It's nothing all that surprising, and it still may correct. It still may correct higher. I still did not get a link for the earnings call. It would be really awesome if we can see sort of what's going on and observe the price action as things are playing out. I mean, numbers wise, call it a no surprise. Call it just, they came in flat almost. At least on the earnings side, on revenue, I mean, 2.5%, sure, cool. We'll consider it a decent surprise, right? 21.68 million, cool, okay. The market is still not reacting positively to that. They are still pointed to the downside on the 30 minutes. We're about to move into oversold territory on 30 minutes. Shortly, I would argue that within about 10-ish minutes, we're going to see even more sort of clear transition into oversold, which will allow us to slide to 108, 103, potentially retest these levels. If not, and we'll end up staying at the current levels where that we are at, the 115, 116, we may end up correcting very, very, very quickly tomorrow and maybe even throughout the night time. So I wouldn't rush to any conclusions yet, but I would say that things as they appear right now for Palantir are not looking good at all. It appears to be that Palantir is about to complete the movement. It was sort of behind on with regards to the various indices and the tech sector, meaning the rest of them were crashing lower while Palantir was able to somehow magically hover higher. And sadly, I think that's due to artificial conditioning of the retail participants into this false narrative of Palantir is unique and gonna float above the tsunami, while in reality it was an artificial wave that was propped up by the institutions, and the same way it was propped up, they can basically pull the rug from underneath you. It is, yes, they put a big bet on the table, but also you did, and when they take the entire pot from the table, it doesn't matter. They take their money back, but yours as well. So remember that. Of course, they had to prop this movement higher. Otherwise, the retail would have not been able to bring the market as high as this. This is absolutely beyond the shadow of that was propped up and backed up by the institutions. Factually, for them, it's simply a trade and not something that has merit to keep on holding throughout a very bearish period in the market. In fact, like I said, we used to do something very, very similar with a stock called Affirm or AFRM. Now let's see, it is looking like market is squeezing back some of that bullish momentum, not a lot, very, very barely so. And I would argue that on the 1 minute it's about to break any minute now. So I don't think it's going to last much longer. Let me see if I got a link from anyone. Did we get a link? No link. Boys and girls, come on. Don't you want us to bring on the earnings call onto the show so we can hear and stuff? Don't you want that? Why am I not able to find the proper one without any annoying person in there? Why is it giving me all the talking heads first? Oh, I think I might have gotten it. Okay. Okay, there we are. We have something. We have something. We're not gonna be able to see it. I don't wanna have any copyright issues, but we will definitely be able to hear it. Okay? Cool. Yeah, I think that's the best one I can find. I will try to keep it quiet. I'll try to point out everything that I want to point out on the screen if there's anything I want to say. Otherwise, I'll try to keep it quiet. Let's see if you guys have any questions or anything in between right now. I really wish I could have had Tom here with me. Sadly, he went on offline or busy or something. I am not sure what's going on. I would have loved to have him here with me and doing this thing. I disagree. Come on, Christoph. Let's not exaggerate. I mean, well, I'll be sure there should be a direct transmission on their on stream on their website. I think. Sadly, with my latest format and everything on my PC, I'm not even sure if I can get my connections to all my previous subscriptions, and I wasn't really ready for this. But again, we're gonna have to deal with whatever we have. Whatever we got is gonna work. Okay? We're gonna have that. At least we'll be able to hear them, so that's good enough, I hope. I really wish I could get Tom Nash here with me. That would have been real awesome. Mr. Tom Nash, are you there by any chance? Come and join. That's gonna be... Hi Greg, would there be a recording posted for the members? Yes, yes Alexander, there will be a recording. Today's meeting was very short. I'll try and make it up for you, boys and girls. Today's schedule completely went out of whack. I really did try. I swear I really did try to keep things on schedule. But yeah, you know, it is what it is. I guess it's my fault. I was not able to juggle everything perfectly as expected. The call is in 15 minutes. Yeah. I mean, at this stage, it's no longer 15. It's kind of like... I think it's starting now, in fact, this very second, sort of. Is it? I think. I ain't sure. We're gonna know in a second. I think it should be starting right away. We're gonna see how things play out. Sadly, boys and girls, honestly, be prepared. Things can get very nasty very quickly for this talk, I'm just gonna say. And I've been warning about this for a very long time, and I know it completely outplayed our expectations with this recent rally. And yeah, I wish I would have been able to sort of able to predict that sort of thing, but that is not something reliable under the conditions to actually for me to even if I see some the funny thing is, even if I did see some suspicious hints to this, I would have not spoke about this nor given it any merit, because it's not reliable. And those of you who know how to do proper technical analysis understand the meaning of how risky things can get and how very badly if you enter the wrong time. And in my mind, the analysis brought me to a singular conclusion. If there is any doubt, there is no doubt, I should not be participating. Earning call trades, people often ask. I say, if you are not pre-prepared and you were not planning on participating in this, you should not be trying to improvise. That will end very miserably. Let's see if we can get it now. Should be working fine. Should be. What was that? Okay, that was something. That wasn't what I was expecting it to be. I'm so gonna have issues with the music. Last time, I think on Nvidia's earnings call, my video got flagged because I had their music playing before the earnings call. That was so annoying, if you will. Alright, boys and girls, bear with me. Give me half a second. I'm going to quickly run to the bathroom. Hopefully I'll be able to get back before we get started. Hopefully they're not going to cause any issues with things, and you can watch the chart in the time being. By the way, those who don't know, those are not from the community here. I now have a one spot in my one-on-one academy in which I teach how to do in-depth technical analysis, and these tools are amazing and really useful for anyone and everyone, regardless whether you're a trader, an investor, whether you think you're an investor but really you're more of a long-term holder, that's sort of normal trader, whatever. It doesn't mean anything how you define yourself. What matters is being able to predict the market price action to the closest sort of relative levels and capitalize on these movements, and definitely prevent yourself from losing lots of money, not knowing about the cycles, how the technical tools work, how you can very, very accurately identify trends, harmonic patterns, momentum, and all sorts of nice things that will allow you to identify future movements and really manage your portfolio far more responsibly and correctly. So I really have one spot left in my one-on-one academy. Grab it before it gets taken. To inquire about the academy, by the way, to sort of remind you quickly, you can join our Patreon or directly the Discord, on which you can ask me in a direct message about the academy. All the information is presented wrong screen, but sure, why not financial advice. There you go. You can inquire about the academy joining in right here into my Discord, going right here to need help, open a support ticket, ask about the academy, and I'll go over with you about the details and information, everything what it entails. This is the price, and as you can see, no bullshit. Currently just one final spot left. Hurry up, grab it before it's get taken, and then you'll have to wait for months on end until the next come. Pardon me, sorry. That was not planned, but yeah, until the very next one becomes available. So hurry up and grab that, or join the community so you'll be in the know. Are we starting? Is it starting? Is it? Yeah. I believe the price action will dip further very shortly, or so it appears, even further lower quickly, so it appears. And so get prepared, boys and girls. This is going to be bloody, very bloody. Elevator music, exactly, sir. Let's hope I'm not gonna get destroyed because of that elevator music. All right, you boys and girls, hold on to your socks, and I'll be right back. Right. And that's what we do or don't do on Tom's channel. Here we do smash the like. It helps. Unlike Tom, I'm a tiny little channel with barely 2,000 subscribers. And Tom, who has, I don't know, where's he at right now? Like a mil at this point? So, yeah. Unlike him, I would do actually appreciate a like. That really does help. Goes a long way. So, yeah, thank you everyone who took the second to really press the like gently. Or, pat it on the head. And all to those who decide to kill the like as well. Where is our earnings call? Shouldn't we be getting an earnings call? Is there an earnings call being planned and stuff? No? Or am I the only one who's not getting the earnings call? $2,000 strong. 2,000 strong? Can I have 5,000 strong or like 10? That's gonna be so much nicer than just 5,000 strong. I'm not gonna complain though. It's here. Why am I not hearing anything yet though? Let's see.
Good afternoon.
There we
I'm
go.
Anna Saro from Palantir's finance team, and I'd like to welcome you to our first quarter 2025 earnings
Let me know
call.
if the sound is good.
We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our first quarter of the year showcased incredible strength and remarkable momentum as revenue grew 39% year over year. Our story continues to be one of preeminence in the US. Our US revenue grew 55% year over year and now makes up 71% of our overall business. Our US commercial business's extraordinary momentum continued as revenue grew 71% year over year. Our foundational US government business achieved compelling revenue growth of 45% year over year. Our results continue to redefine the Rule of 40, with our Rule of 40 score increasing from 81 in Q4 to 83 last quarter. While organizations may consider curtailing spending to drive efficiencies or weather heightened volatility, they find this is the moment they need Palantir the most, the time they turn to us asking, how can we help them adapt and solve their latest challenges? As AI models progress and improve, we continue enabling our customers to maximally leverage these models in production, capitalizing upon the rich context within the enterprise through the ontology. We remain differentiated in our elite execution to deliver quantified exceptionalism for our customers, ever widening their advantage over the AI have-nots. As a result, unrelenting demand for AIP continues to drive outperformance despite Q1 historically being our slowest quarter due to business seasonality. Our U.S. commercial revenue grew 19% sequentially to surpass the billion-dollar annual run rate for revenue in Q1. We closed $810 million in U.S. commercial TCV with a 239% year-over-year growth rate on dollar-weighted duration basis. And we closed twice as many deals of $1 million or more compared to the same time period a year ago. I feel the demand in the conversations I'm having with customers. On the ground, things are accelerating. Customers are getting started, then expanding in quick succession. A large healthcare company did a boot camp with us in December and 5 weeks later converted to a 5-year, $26 million ACV enterprise agreement. A global bank started a pilot with us in Q4 2024, signed a $2 million engagement a month later, then expanded to a 3-year, $19 million ACV engagement 4 months after that. A Fortune 500 healthcare company began working with us in Q2 2024 and last quarter signed a 5-year, $10 million ACV conversion deal. The pace and magnitude of these deals are being driven by the quantified exceptionalism our customers see from day one working with us. We continue to hear from customers that our software's impact is remarkably apparent. A Walgreens executive recently highlighted Foundry and AIP allowed them to deploy AI-powered end-to-end workflows in 4,000 stores within 8 months, automating what would have amounted to 384 billion decisions every day if relying on humans. AIG recently highlighted that they expect the end-to-end adoption of tech advancements leveraging Palantir will double their 5-year CAGR. They noted, quote, "It's an unbelievable outcome in terms of what we get. You could give underwriters unlimited time, 2, 3, 4 weeks. They still can't get the amount of data that I can get within 2 to 3 hours through Palantir." We are partnering with R1 RCM to develop intelligent automation solutions to create faster, more precise healthcare reimbursement outcomes. Their executive noted, quote, "We believe there's a multi-$100 billion opportunity here industry-wide to put money back into the pockets of providers and physicians so they can better invest in patient outcomes." Our name is popping up across earnings calls around the world as companies like Citibank, BP, and L3Harris tout the ambition of their work with Palantir to their investors. Our U.S. government business continues to achieve impressive growth as we deliver towards the vital missions of the agencies we support. As the government focuses on efficiency, our commercially fielded, battle-hardened products stand alone. Last quarter, we closed deals expanding our work in the Department of Defense, including the critical impact we are delivering with Maven Smart System across the COCOMs and the services. The impact is far-reaching. Internationally, we closed a deal to provide Palantir Maven Smart System to NATO to deploy our AI Mission Command solution across its 32 member states. Historically, in periods of turmoil, organizations, both public and private, have turned to Palantir. With the proliferation of AI, you see an even wider gap between the winners and losers. The winners won't be determined by size, but by adaptability. Many organizations are having to reimagine how their business does and should work in the future, simply to survive. We are built to help companies embrace volatility. We expect more surprises, not less. And with the uncertainty ahead, we are more confident than ever in Palantir's ability to deliver tangible impact for our customers, to transform organizations with real workflows in production, and to help institutions adapt to survive. I'll now turn it over to Shyam.
Thanks, Ryan. We've been consistently saying that even while the LLMs are improving, the models, across both closed and open source, they're becoming more similar, and that performance will converge, all while cost per token for inference continues to drop substantially. The market has been focused on AI supply, the models, while we have been focused on delivering on AI demand. It's now blindingly obvious to everyone after the first DeepSeek moment. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on AI demand now and into the world ahead. AIP has entered the next phase of product development and adoption focused on enterprise autonomy. As I mentioned last call, the normative value of AI is the self-driving company. We're not talking about co-pilots that make you 50% more productive. We're talking about agents that make you 50 times more productive. AIP is increasingly owning the position of being the technology that translate the ever-expanding raw capability of LLMs into business outcomes through ontology. AIP is proving to be the best harness to build, test, evaluate, and deploy agents to eat the elephant of the enterprise. Everyday users are building their own agents to realize the potential of enterprise autonomy across both public and private sector. AI agents are operating as part of human AI teams, leveraging the mix of workflow applications for mammals and code-first approaches for AI agents, with ontology as that common intermediary representation of the state of the enterprise. Agents are having a transformative impact for our customers now, from targeting our enemies to targeting supply chain opportunities. You can hear more about these stories, not in our earnings call, but as Ryan mentioned, in our customers' earnings calls. AIG, Citi, BP, L3 Harris, Hertz all mentioned the transformative impact of AIP on their most recent calls. These agents represent AI users, the supply chain agent that works with your supply chain analysts, the intelligence AI agent that works with your human agents. AIP as a platform enables our customers to rapidly build and deploy AI agents that automate more and more of the enterprise in a continuous fashion. AIG announced the AI underwriting agent. AI agents are processing vast volumes of intelligence reports in the Department of Defense, finding things humans missed. AI agents are monitoring for sepsis at Tampa General. As Ryan mentioned, our U.S. business is on fire, and I want to again call out the continued strength with Warp Speed in particular, our modern American manufacturing operating system. Both the adoption and the rate of product development has exceeded expectations. These investments are powering America's reindustrialization, not only with new defense entrants, but also with traditional defense industrial players and the broader manufacturing industry. Turning to government, we delivered our first Titan vehicles to the U.S. Army in Q1, on time, on budget. The Army rated the Titan as a top-performing program. And everything about it is heretical, a military vehicle with a software company as the prime contractor. And it's built by a team of non-traditional defense innovators like Anduril. Maven Smart System adoption continues to grow, with usage doubling in the first 9 months of 2024 and doubling again in the 5 subsequent months. The rate of adoption has really accelerated as Maven scales across more combatant commands and through the services and into more and more use cases. You commonly hear combatant commanders reference Maven in their posture hearings to Congress now. And Maven has reached Europe, with NATO adopting the capabilities of Maven Smart System as its C2 operating system. Leadership at EUCOM said this platform, Maven, has become more than a common operating picture. It's a decision advantage environment that is rapidly transforming the command. AI agents aren't just transforming the U.S. commercial sector, they are transforming how we fight. AI agents are analyzing intelligence, finding targets, automating staff functions, and improving the understanding of the battle space. But we are just at the beginning. Our defense users are amongst the most creative and self-sufficient developers. Green suiters developed the Hurricane Helene Rescue Common Operating Picture in 5 days. Next time, they will have AI agents do it for them in 5 minutes. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. We had an exceptional first quarter. Revenue growth accelerated to 39% year over year, exceeding the high end of our prior guidance by nearly 350 basis points and representing a 1,800 basis point increase compared to the growth rate in Q1 of last year. We achieved another billion-dollar milestone this quarter by surpassing $1 billion annual run rate in our U.S. commercial business for the first time, which grew 71% year over year and 19% sequentially. On the back of this continued strength, we are raising our full year 2025 revenue guidance midpoint to $3.896 billion, representing a 36% year-over-year growth rate, and our U.S. commercial revenue guidance to an excess of $1.178 billion, representing a growth rate of at least 68%. The continued increase in demand for AIP drove the outperformance in your U.S. business overall in the first quarter, which grew 55% year-over-year and 13% sequentially, including our U.S. government business, which grew 45% year-over-year and 9% sequentially. We delivered these outstanding top-line results at an adjusted operating margin of 44%, representing an 800 basis point increase compared to the first quarter of last year. Our revenue and profitability drove a 2-point sequential increase to our Rule of 40 score from 81 in the fourth quarter of 2024 to 83 in the first quarter of 2025. We also had a strong cash flow quarter with adjusted free cash flow of $370 million, representing a margin of 42%. Turning to our global top-line results. First quarter revenue grew 39% year-over-year and 7% sequentially to $884 million. First quarter U.S. revenue grew 55% year-over-year and 13% sequentially to $628 million. Excluding the impact of revenue from strategic commercial contracts, first quarter revenue grew 44% year-over-year and 7% sequentially, and first quarter U.S. revenue grew 56% year-over-year and 14% sequentially. Customer count grew 39% year-over-year and 8% sequentially to 769 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 26% year-over-year to $70 million per customer. Now moving to our commercial segment. First quarter commercial revenue grew 33% year-over-year and 7% sequentially to $397 million. Excluding the impact from strategic commercial contracts, first quarter commercial revenue grew 42% year-over-year and 8% sequentially. We closed $930 million in commercial TCV bookings, representing 84% growth year-over-year. As I highlighted earlier, we achieved a $1 billion annual run rate in our U.S. commercial business for the first time, as AIP continues to drive both new customer conversions and existing customer expansions in the U.S. First quarter U.S. commercial revenue grew 71% year-over-year and 19% sequentially to $255 million. Excluding revenue from strategic commercial contracts, first quarter U.S. commercial revenue grew 75% year-over-year and 22% sequentially. We had the strongest quarter of U.S. commercial TCV booked at $810 million, representing growth of 183% year-over-year. On a trailing 12-month basis, we closed over $2 billion of U.S. commercial TCV bookings, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 127% year-over-year and 30% sequentially. Our U.S. commercial customer count grew to 432 customers, reflecting growth of 65% year-over-year and 13% sequentially. First quarter international commercial revenue declined 5% year-over-year and 11% sequentially to $141 million. The decline was driven by continued headwinds in Europe and by the one-time revenue catch-up in the fourth quarter of 2024 that we noted on last quarter's call. For our international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $5.1 million for the quarter. We anticipate second quarter 2025 revenue from these contracts to be between $4 to $6 million compared to $9 million in the second quarter of 2024. We anticipate 2025 revenue from these contracts to continue to be approximately 0.5% of full-year revenue. Shifting to our government segment. First quarter government revenue grew 45% year-over-year and 7% sequentially to $487 million. First quarter U.S. government revenue grew 45% year-over-year and 9% sequentially to $373 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. First quarter international government revenue grew 45% year-over-year and 2% sequentially to $114 million, bolstered by our continued work in UK healthcare and defense, as well as our new partnership with NATO. First quarter TCV booked was $1.5 billion, up 66% year-over-year. Net dollar retention was 124%, an increase of 400 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the first quarter with $5.97 billion in total remaining deal value, an increase of 45% year-over-year and 10% sequentially, and $1.9 billion in remaining performance obligations, an increase of 46% year-over-year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $391 million, representing adjusted operating margin of 44%. Q1 adjusted expense was $493 million, up 8% sequentially and 21% year over year, primarily driven by our continued investment in AIP and technical hiring. We continue to expect to see a more significant increase in expense in 2025 as we invest in the most elite technical talent, the product pipeline, and AI production use cases, all while delivering on our goals of sustained GAAP profitability. First quarter GAAP operating income was $176 million, representing a 20% margin. First quarter GAAP net income was $214 million, representing a 24% margin. First quarter stock-based compensation expense was $155 million, and employer-related equity tax expense was $59 million. First quarter GAAP earnings per share was 8 cents. First quarter adjusted earnings per share was 13 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 83% in the first quarter, a 2-point increase to our Rule of 40 score from the prior quarter, and our 7th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 80 for the full year. Turning to our cash flow. In the first quarter, we generated $310 million in cash from operations and $370 million in adjusted free cash flow, representing margins of 35% and 42% respectively. Through the end of the first quarter, we repurchased approximately 2.3 million shares as part of our share repurchase program. As of the end of the quarter, we have $918 million remaining of the original authorization. We ended the quarter with $5.4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q2 2025, we expect revenue of between $934 and $938 million, adjusted income from operations of between $401 and $405 million. For full year 2025, we are raising our revenue guidance to between $3.89 and $3.902 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.178 billion, representing a growth rate of at least 68%. We are raising our adjusted income from operations guidance to between $1.711 and $1.723 billion. We are raising our adjusted free cash flow guidance to between $1.6 and $1.8 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our earnings adventure. Palantir is on fire. There's been a lot of discussions basically how we should talk about these numbers and people admonishing me to be a little more modest, and we'll try. The reality of what's going on is that this is a unvarnished cacophony of the combination of 20 years of investment and a massive cultural shift in the U.S., which is generating numbers, again, 71% growth in U.S. commercial, 71%. We had journalists this morning that were asking me if it's a 7 handle. 71% growth. We had 45% growth in our U.S. government business. Every 3 days, you read a headline about how our commercial business would be in danger because of necessary pressure put on the system to root out fraud, waste, and abuse, and to pen test systems to see if they create more value or much more value or less value or no value in the U.S. government. We are seeing rapid expansion and very significant demand for Maven, both in America and outside of America, as all part of our core mission to provide an unfair advantage to the noble warriors of the West. We see an increased recognition that large language models were commodities, that the value of these commodities becomes only realizable in the context of our ontology on top of Foundry. As has been mentioned, the reindustrialization of America is happening in our software. The ability to reimagine your business in a volatile situation happens in our software. If you take the 90% of our business that is outside of Europe, which is going through very structural change and doesn't quite get AI, maybe in the near future will get AI. We are hoping and praying. That part of our business grew 49%. 49%. And we're doing this at a very significant scale. So we're saying we're going to do close to $4 billion in revenue. And last, not least, we're doing this with double the gold standard on the Rule of 40. The Rule of 40 is a very important standard because it shows you the quality of your revenue and because it's hard to attain, especially if you have a Rule of 83. And you know, one of the things that Palantir is doing is we want to bring our friends and our allies along with us on this winning ride. Those friends are largely in America, but also among allied countries. Those friends are inside Palantir, outside Palantir, and we are using ontology and AI, or AIP, to drive these successes. And I would say, while, you know, profitability is apparently, you know, unpopular, the numbers are driven by the fact that we are downstream from value creation. There's a consensus in the market that Palantir owns value creation. And what does that actually mean? It means that when you use our software, when you use AIP, you will get demonstrably more value than what you're paying for, and you will share some of that value with us. And then I would say also, culturally, we just don't see the resistance to the way we roll that we did in the past. We would show up in the past, the freak show, trying to get things to work, not with the wrong access to the wrong people at the wrong time. And that was by intent. And people were very uncomfortable at all levels of the enterprise working with us. And without going into specific names, because, you know, these companies in many cases, you know, are in the middle of transforming themselves, but I'm on the front line with everyone here, and it used to be 2 years ago that we might get a CEO, we might get a CIO, we might get someone in marketing, we might get someone who's willing to rebuild the business, but they had no power. Now we have the full stack engaged with us, inside government, outside government, on the most critical issues. And if you look at the math in terms of where the action is, our business is growing 49%, ex-continental Europe. 49%, Rule of 83. We were the freak show. And we spent 20 years for this moment, and we plan to have nose to the grindstone, focus on taking the best talent inside Palantir, managing them, the best clients, and make sure our clients and our partners, especially in national security, but also with a pretty significant focus on the U.S., win in the way we're winning. And that's why you get these results. And we're going to just focus and focus and focus and focus on execution. And that's basically our plan for the rest of the year and into next year. And we're very, very optimistic about what's going on. And with that, we can kick it off to questions.
Thanks, Alex. We'll now turn to a few questions from our shareholders before opening up the call. Our first question is from Gabriel, who asks, how does Palantir plan to sustain its competitive advantage in AI, particularly in light of growing competition?
Thanks, Gabriel. Well, our advantage comes down to ontology. It's really an advantage on the AI demand side, and that has positioned AIP to be the platform that is able to capture the ever-expanding capability of the raw LLMs and turn that into business value. AIP is that tool factory and the point of control for the orchestration with these models and those tools. You can see this in the sharp opinionation that we've earned in the field with our customers and how to get to value in days or weeks. And most critically, you can see it in the insight that we have that to practically transform the enterprise, you actually need mixed human AI teams. And that is something that AIP is uniquely positioned for.
Thank you, Shyam. We also received a few questions on this topic. How will the current U.S. administration's focus on reducing federal spend, as well as the February announcement of U.S. Department of Defense budget cuts, impact current contracts as well as future contract acquisition?
Well, the first thing I'd say is, like, this is the right thing for the country. Like, we have way too much spend on things that do not work. The government has started to resemble a finely marbled Wagyu. The fake projects that do not deliver and will never deliver crowd out and suffocate the things that could actually be excellent. And so we welcome Doge. I mean, to me, these guys are heroes. They are world-class technologists that could be choosing to do anything, and instead they are choosing to do this. And we believe deeply in the actual value that our software is creating, both on an absolute basis and on a relative basis to the traditional labor-based cost-plus model that has failed to deliver for the American people.
We often get variants of if the institutions are in pressure, either we go through a difficult time in America or there's Doge, how will that affect your software sales, basically? And Palantir does exceptionally well when things are pen tested. We like pressure on the system. We need pressure on the system. And then why is it better for America? Because that pen testing forces you to ask questions like, does the software work? How does it work? How does it manage ethical concerns? How does it manage data protection? How does it manage output? Without pressure on the system, one of the myths is that if you don't have pressure on the system, you just spend money, you somehow get a better system, both in terms of output and in terms of ethics. But actually, you get neither. And so in reality, we need pressure on the system. We need people to have to change. We need people to have to transform. This is why they put up with us. And once they see those results, they stick with us.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thanks, and another amazing quarter. I mean, so my question is, given what we're seeing in the government, isn't that another opportunity where you could actually gain more share of budgets as you go to more meritocracy? Like Palantir should actually gain more dollars within the budgets of DoD and a lot of other agencies.
We're very optimistic about what we're going to do in the U.S., but the devil's in the details. And we're running this business for you, with you as owners, which means it's like there's going to be maybe lumpiness, but we predict we're going to do very, very well. Basically, where you have pressure testing, you can assume AIP, AI Foundry, Ontology, Apollo, and the Palantir culture itself. I mean, we are a warrior culture. Like, that's why our whole culture is built around putting the exact right team and the exact right product at the final mile. And so where you have environments that are crucial and under pressure, you can expect, and where meritocracy happens. It's like, we need meritocracy. How do you get meritocracy? Well, there's lots of ways to get meritocracy. One way is because you're scared. And then you buy the best product, you install the best product, and then the part that's or correlated different than people think is you also get the best ethics, the best execution, and that, of course, and then you can ask a simple question. Why is this a moat? Okay, well, I can tell you why it's a moat, because heretofore no one has gotten into these environments at scale under any circumstance. And if they did get in, they got in with services. So now we have a single-purposed, highly formed stack of software that is exactly right for this moment, with a culture that's exactly right to implement it, which a culture that can teach people how to do this, that is now charismatic for some, it's anti-charismatic for others. And that de facto, it's the compounding rate of return on that stack. And to Shyam's opinion, the opinionation we have about how to do this, it essentially allows you to express your tribal knowledge of your enterprise in a way you could never do it before, on the terms of your enterprise, with unit economics that are heretofore impossible to do. And that's what's happening in this country, and really in 90% of our market, which explains like the 49% growth and the rule of 83, despite what would be viewed on the outside as large ineptitudes in sales and go-to-market and how do we interact with people, and our opinionation, both on the outside, on the inside, and with the frontline customer, which is like, we're not agnostic to using our software as shelfware. We are not in the shelfware business, which is another reason why pressure in the government really helps us. We've never done shelfware. We don't do shelfware. We don't think our personality can afford shelfware.
Thank you, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Afternoon, everyone. So I have two questions. First one is on the European defense buildup. you mentioned warp speed and how that has been successful here. Like, are you interested in applying that as these European countries build up their own defenses and catch up on industrial capabilities that have been underinvested for like many, many years? And the second one is, I think investors are pretty familiar with this like software versus services type of like Palantir approach, because you have been like actually leaders on that trend. But Titan is a great example on how like software actually played a role that was more intuitively hardware. Where else you actually have opportunities for software to add value there? Like, is it Golden Dome? Is space communications? Like, have you think about that?
Yeah, on the first one, Alex may have more to say as well, but we would love to help Europe on the manufacturing challenges around rearmament, and I think there are a lot of them to do. The precondition for warp speed is understanding that the existing manufacturing stack is broken. And so you could say, why did America get there first? Because you have all these people who are essentially the progeny of Elon, who have learned and understood how to actually make things, the sort of brains that go from the Raptor 1 to the Raptor 3 engine. And that's proliferated around the community that's in El Segundo and even beyond. That's like the basis of reindustrialization in America. And so it's when we work with the new defense champions, new industrial champions, like it's a very short sales cycle, because they recognize like that what we're doing with warp speed is exactly what they need in order to do it. When you work with some of the older manufacturing customers, even in the US, it's heterogeneous. Some of them are already there, they get it, they realize it. Some of them are going to be there because it's just a reality. In Europe, there are some green shoots, like some very well-known manufacturing companies have kind of said like, oh, I now understand that my ERP thing doesn't work and warp speed, maybe we should get warp speed. So I just don't want to commit too much. I think a lot of it is where's the customer's head at, but we could obviously do a lot to help here.
Look, Europe doesn't get AI yet. It at some point in the future it will. And then, as you know, Europe is not Europe. You have Eastern Europe, you have Germany, France, you have they're very different Europes. Europe that is scared understands that you're going to have to do software, hardware, hybrid systems, and our products are very, very well known and differentiated. It could take a couple years for Europe to understand that you just can't spend money. You're going to have to spend it on things that actually work, and work means spending it on people that have actually done this on the battlefield. I would say our plan is to continue to be roughly in the zone where 90% of our business is growing like it is now at 49% with this rule of 83, and somewhere in that range we guided to rule of 80, and that's going to be primarily driven by the U.S. I would say as a unknown variable, we're seeing very significant demand for our software, our government software, around the world outside of Europe. And those are early days, but you know, the demand, the signal there is very strong.
And then on the Titan point, I think that's an excellent point, and is going to be a big part of the future, where you're really thinking about how do you build your hardware around the software. You know, there's some classified projects that we have as well, where the first step to building the hardware is not to build the hardware. It's actually to build the mission payload and the software that can execute. Figure out what is the hardware that you ought to have around that. And this plays to this, like it is actually a cultural impedance mismatch. Like, if you're a hardware company, you think about the world the way that a construction person would think about building the house. You have to pour the foundation first. You can't do anything. But actually, with software, you have to build the kitchen first. If you don't, you're gonna get it all wrong. And so I've seen a lot more of the next gen programs are starting to think about how do we build the lethal software first, and we'll figure out how to wrap the hardware.
One of the most interesting things about the current environment we're in is something Shyam is alluding to, which is, and again, it's a European versus American. People assume if you're world-class at hardware, you'll be world-class at software, and they're interchangeable. It's just not true at all. And like the skills and the taste you need to do software is a completely different thing. And America's unique advantage is hybrid software, hardware, software, and any program that's trying to outpace and beat our adversaries it basically is going to have to begin with a software first or software hardware hybrid program, because otherwise we're at a disadvantage. And also the resourcing and the way you organize is going to be suboptimal in this country. Conversely, this is one of the challenges that some of our allies and our adversaries have. You know, the role of taste in in getting these things to work, tribal knowledge and ability to do it is really, really underestimated.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we wrap up the call?
You know, this company is organized around giving our friends a really strong shot, I would say unfair advantage, and, you know, not helping our adversaries or enemies and on occasion hurting them. And, you know, a lot of you are scattered around the world and helping us in many ways. And we are in a phase where we are very focused on scaling our company. And we really appreciate your support and the fact that you defend us. You know, our support of Western values is often under attack for somewhat idiotic reasons. Our belief that meritocracy will lead us to a better place, that competence is better than incompetence, that competence includes ethics, and the results, the fruits of those labors are here today, but none of that would have been possible without your support. So thank you.
Thank you. That concludes Q&A for today's call.
Well, very unexciting price action. The current level that we're residing at, as you can see, is very weak, as I've wrote down. We're basically about to continue. In fact, the whole level sort of resides on whatever is left from the 30 minutes.
This
in fact,
Democracy
the further...
Now, democracynow.org,
give me a second.
The War and Peace Report.
What is that? Where's that noise coming from? Go away. All right. Sorry. Pardon me for that. And there is these little buts that I wrote and sort of marked because we're having this little but. This but still is in oversold territory, so let's not forget and confuse ourselves. The current levels that we're residing at still looks very, very weak, and I would argue that we should be making it to 108.23, 103, based upon how the momentum is structured right now. Will it hold for long? Hard to say. Why? Because it broke below the channel. Very correct. And you have another layer of a channel, if you remember, we just gone over them, that resides kind of where we marked, right? You can see, here it is. And it seems like we're moving towards that bottom, and so I don't think that's going to last nor hold. Butts, right, we get butts, a bunch of butts. The bottom line is that your 1 hourly, which obviously you shouldn't be looking at for today anymore, that's tomorrow's session, appears to be again very bullish and tugging into oversold conditions, resulting in more downwards pressure. And I would argue 108, 109, these levels that we just spoke about, resulting then slow deterioration to 103. And of course, as I marked, don't forget you have a psychological 100 there. That's going to be, of course, I doubt we're going to skip that one. It's going to be definitely a level we will retest and go over. Seriously? Thank you. That's nice. There we go. And so basically what we got here is almost this very narrow minefield, so it's not going to be all that surprising. I also try to point and highlight how these levels have been retested, some of them. And by the way, if you really want to see, I mean, you be the judge, right? You can see how conveniently it all fits into the past narrative and how all of these levels have been retested multiple times, so we're very well aware of them. And so yeah, it's not going to be all that surprising if we'll test these levels on our way down, as we are kind of nearing them, and our overall momentum is still very bearish and will result probably with the deterioration in the price action. In fact, it's pretty amazing how high the price action was able to achieve in the first place, and we were actually just warning about this. And I was asked about, playing the earnings, and I warned about this many times. If you had your position pre-prepared in advance and some sort of game plan and orders to execute and stop, take profits, take stop losses in case you need, that, of course, if staying within the margin of safety, so to speak, not necessarily a bad idea. But since most people were unprepared and decided to take that leap in the very last second, that's a very bad choice. More often than not, it's going to result with losing money, even if somehow the market overall still results moving in the right direction. Depends on the sort of option or position you took. It appears to be that the market is becoming more and more bearish on the medium and larger time frames. Currently, the only one that is sort of in between that weekly, but the weekly is curving right below the 50 range, which is very indicative of a continuation of a trend downwards, which again, quite amazing how far we were able to push up on this a very small, so to speak, trend. In reality, it's, I mean, chopped us back all the way to 50% and all the way up, so pretty significant, I would argue. Unexpected. Overall, you still have a very vast chasm that is going to develop in the price action in the upcoming months. Why? Because, well, Palantir is not unique in that sense that it does not float above the market, even if we're going to develop this gap. If remains being relatively small, which by the way, 112 to 123.77 where we started is not such a big gap, and it's not going to be all that surprising if the market will actually close it tomorrow, literally, like it's not that insane. It can be done very, very rapidly. Still does not change the overall direction of Palantir, which I think a lot of people were misled to think this is a beginning of another rally. Well, in reality, it's just a bull trap, a very, very sophisticated one, I would argue, and probably one that they were not planning. I'm talking about the institutions in the first place, but more so notice that they have an opportunity to execute this and have another run on the very same prices, and resulting with the retail getting tremendously exciting, dipping their toes, starting throwing more money. With every day it gets better and get better, and they get enticed more and more and more, realizing that they basically were misled to buy into a rug pull of sorts. Time to stack up on some Palantir. Well, again, you do you, Softish, but if you ask me, this is just a very misleading movement was happening in the first place to lead the vast majority of the public to think that it's an actual rally, while breaking their own averages because it's on the higher end of things, while still resulting in a rug pull that's going to be far more quicker than people expect. I mean, as you can see, we already took out the last sort of 2 sessions, if you will. In fact, we can argue 3 sessions, even 4, kind of depends on how far you want to look, because we've been retesting these levels for a while. Instead of looking at the diagonal, hyper-focusing, realize that there is a horizontal level here that was being retested. Now we just broke below. Like I said, at the end of the day, the distance, that gap between where we are right now and if we're going to remain around this area all the way to tomorrow, it's not that far-fetched to think that it's going to get closed. It's just, it is far-fetched to think that the market will continue the movement upwards for a long time. The Palantir is still very much, you see, I don't have a problem with Palantir. Palantir is the future, whether you like to accept it or not. It's going to improve and going to make everything more efficient with time. The problem is, it's not necessarily going to happen tomorrow. In fact, right now, it's sort of counterproductive. A lot of people get fired because of Palantir directly and indirectly. Of course, it does wonders on the military and governmental front, but it has nothing to do with their earnings not being as good as they may expect in the upcoming 2 quarters. At least I don't think so, based upon just, I mean, right, turmoil, but you cannot risk your tiny bit of profit margin for a potential improvement that will maybe allow you to roll over another quarter or another half year and then break within half year. In fact, you better start sort of, folding up right now rather than later. And so not for every company it's a given and an obvious to sign up with Palantir. No. But still, irregardless, I do believe Palantir will be, doing very well on the other side of this process. They will have plenty new clientele over time. Eventually, everybody and anybody will use them, including, literally everybody and anybody. Government's a little bit more of a sophisticated thing. Obviously, we do understand they were talking about Ukraine, Israel, probably. I do see very valid and proper cooperation happening between Palantir and Israel and Ukraine. I absolutely can see. I mean, we already know it's operating in Ukraine in some capacity, and we know that the governmental sort of forces who are cooperating with the Israeli forces, with the IDF, of course, probably use that in some capacity as well, and probably expanding on that, so it's not all that surprising. Maybe they're talking about Taiwan somehow, if, maybe in some capacity, China and Taiwan and all that mess, right? Which kind of horrifies me. I'm like, guys, China is threatening 5 different countries. Guys, get together and whoop their ass. Show them where the pee-pee's from, where the fishy pee-pee's from, as we say. With all due respect to China, I mean, look, China is a necessary evil of sorts. I mean, we really need them. But with the current, I mean, Xi Jinping is literally a dictator that is creating a horrific sort of environment for the Chinese people, where they could be having such a better lifestyle and subsequently being more cooperative with the world, not resulting with these trade wars, which in turn hurt everybody, the U.S. public. Whether in the long run it will be beneficial and fix lots of things, right now it hurts everyone. I mean, China is the manufacturer of all little tidbits, plastic and everything in between, whether you like it. If the car is designed in the U.S., oftentimes half of the car is built in parts in China, then assembled somewhere else, right? The bottom line is we all need China. We need to have a good relationship, right? But they really are sort of, not being nice in the region, and so it's not going to be all that far-fetched if Palantir will be used in some capacity with Taiwan. What else? That's it. That's all I want to say, I guess. At the end of the day, we didn't get enough of a severe movement to say that's it. This is the end of all things for Palantir. Tomorrow we wake up to a 20 handle price. No, hell no. It's going to be a very gradual, tedious process, although I think it's going to be a lot more volatile than some people understand. In fact, similarly to Affirm, how I mentioned earlier, we had a very similar behavior with Affirm, and I think we're going to see something very similar here with Palantir, because the institutions basically see this not as a value opportunity, but something proposition, but something that is more of a temporary trade, whether in the long run they will be holding or not. Right now they're seeing a very lucrative trade, very lucrative swing, and whether they like or believe in the company individually, right now, just like them, just like me, we would all take that trade simply because it's money laying on the floor. Why not pick it up? Because it's going to happen anyways. That's kind of what I'm seeing right now with Palantir. Nothing all that significant. Remember, we still may see a correction on these gap. Tomorrow morning, this is very weak. I'm not impressed in neither direction. But I will remind you, the market is still overall bearish, and the overall trend on Palantir is bearish subsequently. And so it's basically a matter of time until we completely run out of momentum and start breaking down with the rest of the market. As I said, Palantir will be breaking slower and almost as if dropping as if with a parachute in comparison to the rest of the tech sector. Simply because it's going to benefit from this turbulence, simply because them having a very proper balance sheet, unlike a lot of companies, borderline zero debt, if not zero debt. I need to check on that, haven't checked in a while. But regardless of, they're doing well, their investments panned out very well, so they're sitting proper. One way or another, it's only a matter of time until this entire deeper movement will come to an end, and I do believe Palantir will be around until then and will in fact thrive afterwards. That's it, boys and girls. Not much to say. Again, I'm a big fan of Palantir. I really am a big fan, and I really do believe it's going to become some form of a staple worldwide. It's just a matter of time. And until then, it's going to go through this turbulence, and they're going to try and prove themselves, which I think at this stage, I think they're trying too hard. I'm not even kidding. The beginning of that earnings call sounded almost like a commercial. That sound, to me, the sort of outside observer, that would sound very like try hard, very bad, which if you're that great and amazing, you ever see a Rolls-Royce commercial? Probably not. Rolls-Royce, sells themselves, right? You don't really need to have a commercial for them. You know what I mean? That kind of thing. Bentley and Maybach, right? You probably don't see commercial for these sort of brands. And so I think, you probably just, place a car in a yacht sale or something, and right, some rich guy will buy it. That's kind of how it works with the yacht. But yeah, the same thing. So that sounded a little bit like try hard in the beginning there. Not good. But overall, yeah, remember, Palantir is, in my mind, going to be an inevitable staple. It's just the road to it is going to take a long while, because the problem is not with Palantir, as we said, nor with Alex, nor with Cham, or with anyone from the staff. It is with the market. Palantir cannot thrive in a painful environment, although it does benefit them in the long run, yes, but in the short run, it will hurt them. That's it, boys and girls. I think we're gonna close this up. Was an interesting call, not too exciting, not as crazy as the last ones, although you probably noticed and you heard that Alex was banging on the table there, just going bananas, basically with every single sentence, just boom, boom, boom. I like that. Alex is a character, and he really believes in the success of the company, the calling of the company, if you will, right? He almost himself perceives himself as if he has a calling with this company, with this endeavor. And I truly believe he's probably one of the best, if not the best CEOs for this. He's legitimately exactly the sort of person we need to lead this project and company, if you will. And yeah, I think he's great, a bit crazy, but great. And I think he will lead Palantir into great success. That's all. That's it, boys and girls. We're done for today. See you on the next one. Definitely come and hang out with us in the community. Remember, I have one spot in the One-on-One Academy. I deeply apologize to all of my members that today got, infected by the earnings call and everything, and the mismatch of the schedule. Dear members, I promise to you, from here on out, we're just going to get more and more and more stuff, so don't worry about it. If we got 20 minutes here, a little bit there, a little bit less than planned, don't worry. We're going to get so much more stuff to do together, and coverage over various assets and analysis that it will sort of fade into the, into the background. The fact that we were not able to complete everything that we wanted today, but don't worry about it. We're going to do a lot more. See you in the Discord, see you in the community, see you on the channel, and see you in the next one. Have a good morning, night, evening, whatever you have, wherever you're at. Bye for now.